तो इसमें मुद्दा ये है कि रिलायंस इंडस्ट्रीज के नतीजे आए अभी बाजार बंद होने के बाद। अभी थोड़ी देर में मैनेजमेंट की कॉन्फ्रेंस शुरू हो जाएगी, उस पे सबसे बड़ी जो अपडेट है वो आप बिस्तक पे देखोगे। लेकिन फिलहाल यहाँ पर अभी जो रिजल्ट्स आए वो मैं आपको बता देता हूँ, क्योंकि रिजल्ट्स इन लाइन है। अगर आप फर्स्ट टेक में देखोगे तो रिजल्ट्स इन लाइन है। मुनाफे की फिगर 17,394 से घटकर 17,265 हुई है। और ये थोड़ा मुनाफा जो है वो आपको अनुमान से थोड़ा कम नजर आएगा। क्वार्टर ऑन क्वार्टर बेसिस पे मैं आपको बता रहा हूँ। अगर आप साल दर साल देखोगे तो 15,792 करोड़ से बढ़कर मुनाफे की फिगर 17,265 करोड़ रही है, लेकिन तिमाही दर तिमाही 17,394 करोड़ से घटकर 17,265 करोड़ क्वार्टर क्वार्टर रिलायंस इंडस्ट्रीज मुनाफा वो क्या है, कोई इतनी भी ज्यादा दिक्कत नहीं है। अच्छा मुनाफा कंपनी ने पोस्ट किया है। आय जो है वो 2.32 लाख करोड़ से घटकर 2.25 लाख करोड़ रही है तिमाही दर तिमाही आधार पर। एबिटा 1% घटा है, 40,656 करोड़ रिलायंस इंडस्ट्रीज का क्वार्टर क्वार्टर एबिटा आया है। और जो मार्जिन है वो 17.7% से बढ़कर 18.1% आए हैं। इन नतीजों के मुख्य हाइलाइट्स ये हैं कि कंपनी का जो प्रदर्शन है वो रिटेल सेगमेंट में बहुत बेहतर रहा है। अगर आप आय फ्रंट पे देखोगे तो रिटेल सेगमेंट की ग्रोथ बहुत बढ़िया दिखाई देगी आपको। और साथ ही साथ जियो का जो प्रदर्शन है वो भी अच्छा दिखाई दे रहा है। प्रॉब्लम एरिया आया है ऑयल टू केमिकल कारोबार, जिसमें ऑयल टू केमिकल रेवेन्यू जो है वो लगभग 4.7% क्वार्टर क्वार्टर घटे हैं। और अगर आप रिटेल सेगमेंट में देखोगे तो वहां पर 8% रेवेन्यू बढ़े हैं। 83,040 करोड़ के रेवेन्यू कंपनी ने पोस्ट किए हैं रिटेल सेगमेंट पे। ऑयल टू केमिकल कारोबार इस बार ड्रैग है और एक्सपेक्टेशन भी यही थी कि ऑयल टू केमिकल कारोबार का प्रदर्शन कोई इतना अच्छा नहीं रहेगा। डिजिटल सर्विसेज का जो कारोबार है उसमें 2.5% की ग्रोथ हुई है रेवेन्यू में, 32,657 करोड़ से बढ़कर 33,463 करोड़। और ऑयल एंड गैस ये था अच्छा बीट, क्योंकि ऑयल एंड गैस सेगमेंट में ग्रोथ देखने को मिली है। 6,620 करोड़ से रेवेन्यू बढ़कर 6,719 करोड़ रहे हैं। जियो का प्रदर्शन कैसे रहा है देखिए, जो जियो के आरपू का जो फिगर है ना वो स्ट्रीट एस्टिमेट से कम हो गया। स्ट्रीट एक्सपेक्ट कर रही थी कि 183 रुपए के आरपू आएंगे, उसके मुकाबले एवरेज रेवेन्यू पर यूजर 181.7 रुपीज का आया है। यह आपको सालाना आधार पर बढ़ा हुआ दिखाई देगा, क्वार्टर क्वार्टर पे बिल्कुल फ्लैट है। और ये तब है जब लगभग 1.12 करोड़ ग्राहक कंपनी ने जोड़े हैं। रिलायंस जियो के सब्सक्राइबर एडिशंस बहुत फास्ट हैं इंडस्ट्री में। इस बार भी जो सब्सक्राइबर एडिशन है वो है 1.12 करोड़ क्वार्टर 3 में। 47 करोड़ ग्राहक जो हैं वो रिलायंस जियो ने सब्सक्राइबर बेस बना लिया है अपना 47 करोड़ का, लेकिन जो आरपू है वो मिस कर गया। इस बार स्ट्रीट के एक्सपेक्टेशन के मुताबिक नहीं आया है। पर ओवरऑल अगर जियो की परफॉर्मेंस देखोगे तो 3% मुनाफा तिमाही दर तिमाही आधार पर बढ़ा है। 5,208 करोड़ रुपए की फिगर आई है मुनाफे की। जियो का जो आय है उसमें 2.5% की ग्रोथ देखने को मिली है, 25,368 करोड़। जियो का जो कामकाजी मुनाफा है उसमें 2.5% की बढ़ोतरी देखने को मिली है, 13,277 करोड़ क्वार्टर क्वार्टर बेसिस पे। और जो मार्जिन है 52.3% पे बरकरार है। तो ये नतीजे इन लाइन कहे जाएंगे, बिल्कुल इन लाइन नतीजे हैं। तो रिलायंस इंडस्ट्रीज सबसे बड़ी मार्केट कैप वाली कंपनी के जो नतीजे आए हैं पोस्ट मार्केट आवर्स वो फर्स्ट लुक में देखने में बिल्कुल इनलाइन लग रहे हैं। जो मेजर थ्रस्ट आया है दैट इज बिकॉज ऑफ रिटेल, ऑयल एंड गैस, जियो, लेकिन ऑयल टू केमिकल कारोबार का प्रदर्शन उतना अच्छा नहीं रहा। अब देखते हैं मैनेजमेंट क्या कह रही है, आइए आपको वो सुनाते हैं।
44,700 crores. This is up 17% year on year. Net profit at 19,641, up 11% year on year. And here the earnings have been led by very strong performance in retail and oil and gas. Digital services has been steady and a 1% increase in O2C. In retail, we have seen very strong momentum. There is expansion of footprint. We are seeing higher footfalls. In digital services, we have added the number of customer ads in this quarter, and also importantly on a year-on-year basis has been very strong. We completed the 5G rollout on a pan-India basis. In O2C, it has been a resilient performance despite major planned maintenance shutdown that you are aware of. And also downstream margin environment, as you know, has been a bit weak. Had it not been for the shutdown, we would have on O2C basis been higher on a year-on-year basis, and the performance would have been comparable even to the previous quarter. In oil and gas, benefiting from ramp up in MJ1 production, and now KGD6 contributes 30% of India's gas production. A quick summary of the numbers. As you can see, revenue in retail is up 23%. EBITDA at 6,258 is up 31%. So clearly you can see the benefit of operating leverage kicking in. Overall area operated in million square feet at close to 73 million is about 21% higher. And we saw growth across segments. Footfalls higher by 40%. We added about 252 stores. And when you see on a year-on-year basis, we have added 1,549 stores. And the percentage of digital and new commerce revenues as a percentage of total still at 19%. So it's a very, very fast expanding base. So it's a good set of performance there. In digital services, revenue, EBITDA up about 11.5%. I talked about customer ads. We added 11.2 million net customers in subscribers in this quarter. And for the whole year, it is 38 million, very strong performance there. Data traffic continues to be strong, 32% on a year-on-year basis. This true 5G is now available across India, and 90 million subscribers have migrated to the 5G network. On O2C side, revenue slightly lower. You saw Brent being about 5.5% lower on year-on-year basis. EBITDA at 14,064, 1% up. As you know, I talked about the planned maintenance shutdown of our major units. Also, there has been downstream chemical deltas have been weak, anywhere between 4 and 17% when it comes to lower deltas there. And clearly supply overhang is there. Demand has been weak. That's on the downside, on the market side there. But we have been able to compensate it, with domestic demand being able to place there, because India oil demand is up 2%, polymer is up 10%. Gasoline has played an important role in compensating. There has been a recovery in fuel retailing, and also the benefit of ethane versus naphtha was fully felt in this quarter. On the oil and gas side, at 5,804, it is the best ever quarterly EBITDA. As you can see from the chart, KGD6 production almost up 73%, and revenue and EBITDA up 50%. And now KGD6 production is almost 30 MMSCMD. It's, as you know, a significant contributor to the transition fuel availability for the country. So bringing these numbers together, you can see revenue at 2,48,000 crores, up 3%, lower O2C, higher retail. On EBITDA side, as I said, 44,678, it's up 17%. This is despite the very large shutdown in CDU, in coker, in FCCU, and also the off-gas cracker. Had it not been, as I mentioned, EBITDA would have seen a year-on-year growth, and the numbers would have been pretty similar to what it was in the previous quarter. And as you can see, the EBITDA flow through, despite higher finance and depreciation, we have delivered a net profit of 19,641, which is up 11%. And when you look at it from entity-wise, RL almost close to 10,000 crores, JPL at 5,500 crores, RRVL at 3,200 crores. So RRVL, you can see EBITDA growth at 30%, and even the net profit growth is almost in the same range. So a quick one on the bridge, year-on-year bridge. As you can see, every business has delivered in terms of growth: oil and gas, retail, digital services, and others too. But as I mentioned, O2C has been stable EBITDA in a weak downstream market environment. We have done a lot to offset some of that market weakness by focusing on crude sourcing, by focusing on ethane cracking, by placing more products in the domestic market. Oil and gas, as I mentioned, higher volumes helping deliver 50% increase. Retail, very broad-based, and grocery sales up 41%, fashion and lifestyle up 28%, consumer electronics up 19%. On digital services, healthy subscriber growth, and also improvement in the ARPU side. And others reflect multiple factors across other businesses which have done well, focus on cost, improvement in treasury income. All of them have helped deliver the other segment. And on a sequential basis, barring O2C that I talked about, you can see a strong growth. On the oil and gas side, in the previous quarter, we had costs related to field commissioning and decommissioning, which is not there this quarter, and so that explains the jump there. Otherwise, on retail and digital services, retail earnings, as you know, sequentially has gone up by 7%. And you have seen performance in digital services too. And coming to net debt, marginal change in net debt, 1,19,372, very similar to what we had in September 23. We have been talking about moderation of capex, and you can see that overall capex is now for this quarter at 30,000 crores. It was about close to 39,000 crores in the previous quarter, and a year before that too it was there. So clearly you can see that the intensity has come down. Otherwise, fair to say that cash flows remain strong, balance sheet is strong, and the moderation in capex will continue to help value creation. With this, I'm going to hand it over to Kiran.
Thank you, Srikanth. So we are nearly 1 year, in fact, a shade over 1 year into the rollout of our True 5G services. And as Srikanth alluded to in his opening remarks, nearly 90 million subscribers have already migrated to 5G on our network. And another great thing that we can talk about is that this entire 5G deployment and the traffic coming from the 90 million subscribers are all carried on our own core, which has been built and deployed on a pan-India basis. If you see the graphics on this chart, just a year ago, in December of 2022, we can say that India was 5G dark. And if you look now at the situation as we complete December of 2023, and now we are into the new year, we can truly say that India is now 5G bright. And obviously, this superior network has really strengthened our position when it comes to the mobility service. Our 5G availability on a pan-India basis, on a quantitative basis, is nearly 3 times that of our nearest competitor. And even in terms of quality, the overall download speeds on our network is nearly 2 times that, again, of our nearest competitor. So I'm glad to say that overall, Jio has completed the True 5G network rollout as promised, well ahead of the schedule of this pan-India deployment. This is also reflected in the fact that we are becoming the preferred choice for subscribers. If you look at the graphic again on the right, you can see that as the industry overall has had a nearly flat 0.7% growth on a year-on-year customer base basis. But the stark difference is between the growth numbers delivered by Jio on a year-on-year basis as compared to the rest of the competition. While the rest of the competition actually has seen degrowth of nearly 3%, negative 3%, Jio has shown a nearly 7.5% increase in its subscriber base. All of this is a testament to the fact that our 5G service is really pushing the envelope even further. We were already considered one of the best quality, highest quality networks anywhere in the world. But now that gap between Jio's 5G network and that of our competitors has increased substantially. If you look at another number, which is the net port-in numbers, this also indicates the intra-competitor movement, rather inter-competitor movement of customers from one operator to the next. In terms of port-in, again, we have been nearly 2.5 times of our nearest competitor in terms of net port-ins. So this is actually, all these metrics are pointing to the fact that our 5G network is really positioning us as the preferred choice, even beyond what we already were. And the numbers, both in terms of subscriber additions and growth, as well as the net port-in numbers, is a testament to the fact that we are now extending that lead over our competitors. The another initiative that we were consistently speaking about over the last few quarters is the Jio Bharat initiative. Now, this is also a very concerted effort that we undertook to move the 2G base, which is largely a captive base with our competitors, but to bring them onto the 4G base, at least to begin with. So really, the fact that we were able to completely design, manufacture, and distribute a 4G device which is on par or even cheaper than comparable 2G phones from a handset price perspective. And now those are translating into some very encouraging numbers in the market. If you see that in the less than 1,000 rupee price segment, which is really where the 2G phones operate, Jio Bharat, just in the short period after its launch, is now seeing nearly 45% market share in the shipments, which are happening on a month-on-month basis. Also, if you see the growth that we are seeing, the Jio leadership growth that we are seeing in the rural markets, again, the market where I think this product has been targeted at largely. Since the Jio Bharat launch, we have also seen the growth in our subscriber base coming from the rural markets. The net additions that are happening in those rural markets have now grown to become nearly 5.5 times of our nearest competitor. So our net adds are 5.5 times that of our nearest competitor. And even within our own network, if you see, just before Jio Bharat launch, again, the graphic on the right, we still had a lead, but the lead was, you could say that while the net adds in millions, while our competitors were adding about 3 million net adds, you could see that we were adding nearly double of that, 5.6 million customers. But post Jio Bharat launch, if you see the real drop-off in the net add picture coming from our competitors, while our numbers have really strengthened even further. That's really the 5.2 times the nearest competitor number that I was speaking about. Also, in terms of engagement, almost all of those features, including live TV playback in Jio Cinema, which is a hero use case because people could never imagine that kind of a service of live television being available on such a handset. So that's really picked up the Jio Bharat users, because financial transactions and UPI payments were another strong use case that we were promoting with such a device. And nearly 60% of the total UPI 123 pay transactions, which are really those transactions originating from these low-end handsets, is now contributed by Jio Bharat. Coming to the home, while we had a market-leading service in Jio Fiber, but using our 5G service, a pan-India 5G service, we are really now supercharging our home broadband delivery as well through what we call Air Fiber. And really, you could argue that the big cities were reasonably well served through our optical fiber network. But as soon as Jio Air Fiber got launched, we are seeing really demand getting unlocked from the tier 3, tier 4 towns and rural markets, where this is a completely unique service. There is no other competitor to speak of. And the fiber quality broadband service powered by our 5G network is really finding traction in those markets. And also the fact that we are using our own technology, our own 5G core to carry traffic, the real heavy traffic that is really coming from the homes, also means that we are able to do it extremely cost effectively. I mean, obviously, like I said, in many of these markets, we are the only game in town. But even if you look at global comparables, we are among the cheapest anywhere in the world. Also, I mean, this is quite a pleasant surprise for us. But we had a rich bouquet of content that we are also bundling to encourage adoption, especially when we go to these markets where people don't have a habit of or even awareness of having used these kind of services. But what we are really seeing is that Jio Air Fiber is actually on a like-to-like basis against our Jio Fiber service. We are seeing a per capita usage which is nearly 30 times more than our optical fiber service. Thanks to a lot of that, thanks to the content that is also bundled with it. But really, this habit formation and adoption is really encouraging as we are really picking up the pace when it comes to rolling out air fiber across the country. Talking about enterprise, again, very strong growth that we are continuing to see. I think almost more than 80% of the large enterprises are already Jio customers. But if you look at it, 33% of the large named enterprises now have graduated beyond connectivity. So they are using 2 or more of Jio services. That means a basic connectivity service and 1 or more of our digital services, which we are also vertical and horizontal digital services are now increasingly getting bundled along with our connectivity service as we serve these customers holistically. Just to give an example of penetration in some of these critical industries, if you look at the top 10 banks in India, nearly 50% of the branches of the top 10 banks today run on Jio network. And that gives us a foot in the door to even bring some of these additional digital services also to grow that engagement with these large enterprises. In fact, in many of the cases now the situation is looking to reverse. Earlier, network was the driving force and digital services was an add-on. But now if you see the recent trends, nearly 20% of the new deal wins that we are winning in the enterprise is actually driven by a non-network service, which also shows that digital services are truly coming into its own. And again, if you see over the last year, there has been a 1.3x increase in revenues. If you look like from the top 100 accounts that we have had, there's been a 30% growth. If you look at the number of accounts who are actually contributing to more than 5 crores, that's like a watermark. That number has also increased to nearly 50% more than what it was last year. So 1.5x increase in the number of accounts there. And obviously, professional services and retail and education. These are 3 key sectors which are beyond the large enterprises. When we get into the SMBs, again, we are seeing a lot of demand coming from these sectors. So schools, training institutes, and so on. Professional services being the people's like lawyers and accountants and so on. And obviously small retail. I think these are 3 large sections within the Indian economy, and we are seeing a lot of adoption and a lot of demand coming from these sectors. So when I was speaking about the digital service and the growing portfolio of services that we are now well positioned to offer looking into the future, on this slide we are just showcasing a few of those which we had introduced and unveiled during the India Mobile Congress last year in 2023. Everything from what we call Jio Space Fiber, which is the gigabit satellite connectivity that we are bringing to India. Jio Cloud, which is our compute platform, which is now built and being offered to enterprises. Increasing adoption of AI, so some of the SMB and skill development type of applications again that we showcased. Gaming, which is again augmenting the fact that we have a very strong home play, but how do we bring cloud gaming, which is doing away with the need for expensive consoles and therefore creating mass scale adoption of games into Indian households. And we have a very young population who would absolutely love to engage with these kind of offerings, assuming it is affordable, and that's what we are able to do with the cloud approach towards delivering this. Connected vehicles, again, we are becoming a partner both to connect and also to bring digital automation to a number of vehicle brands, and some of those examples also we showcased. As 5G is getting rolled out across the country, some of the large manufacturing locations and large enterprises would like to have what is called private 5G, which means a dedicated installation just to power a factory location or a large campus. And that's also something that we showcased in a very small server. We can actually plug it into their data center, and they can really be up and running with the 5G network in their campus. Again, thanks to the fact that this 5G core is something that is homegrown, we are able to package that in very interesting ways to even support private 5G use cases. And beyond that, obviously, things like healthcare, agriculture, these are some critical sectors of the economy. And again, we were able to showcase certain IoT type solutions, again, taking advantage of both our 4G and 5G network, which is now ubiquitous across the country. And beyond the products, I think we are also entering into what is called managed services. And here, basically, what we are trying to do is helping our customers, enterprise and small and medium customers, with everything from advisory to implementation, as well as ongoing management of the entire digital set of services that they would need. And that's also unlocking a lot of service revenues for us looking into the future. So I think the network story is unfolding well, both in the mobility, the home, and the enterprise segment, and the digital services contribution towards the contribution towards both account wins as well as the year-on-year growth in the per account revenues. All of that is now looking in a pretty good shape as we head into the new year. I think on the operating and financial highlights, I'll request my colleague Anshuman to step in here.
Thank you, Kiran. Good evening. Hello, everyone. I'll take you quickly through the financial and operating performance highlights for the quarter. Both revenue and EBITDA during the quarter grew by double digit on a YOY basis. Revenue grew to 27,700 crores, 11.3% growth, and EBITDA touched almost 14,000 crores for the quarter, with a growth of 11.5% year on year. We're sustaining the outperformance in subscriber additions, as Kiran spoke about, with the superior network deployment of 5G. We are tracking a lot of the premium customers as well. We saw a net addition of 11.2 million subscribers during the quarter, taking the subscriber base to 471 million. ARPU for the quarter was at 181.7 rupees. Now, while there was some increase in the ARPU due to the subscriber mix, also the fact that we are currently offering 5G services on a trial basis impacted the ARPU, because people don't have to recharge for additional data usage at this point in time. So therefore, there was a counterbalancing impact on the ARPU during the quarter. Customer engagement continues to be very strong, 31.5% year-on-year growth in the data traffic on the network. And that's also happening because of the 5G deployment. The users, 5G consumers, are consuming significantly higher amount of data than they were consuming on the LTE network, obviously. So that's causing the increase in the data consumption. And again, as Kiran said, Jio AirFiber is expanding, and the addressable market. We are expanding the addressable market with the deployment that we are currently doing. It's already now present wide and across in the country. And the customer engagement signs have been very encouraging with the early set of customers that are on the Jio AirFiber. The key operating matrices for RJIL are connectivity business. The subscriber mix, the customer base at the end of the quarter was 471 million, net addition of 11.2 million, which has been actually the highest for the last several quarters. So we're seeing that uptick in the subscriber addition over the last several quarters. ARPU at 181.7 rupees. The per capita data consumption increased to 27.3 GB per user per month during the quarter, and that's continuing to show an increasing trend. And even the voice traffic was increased during the quarter, so 7.9% YOY increase in the voice traffic. Moving to the key financials for RJIL, again, the connectivity business. The operating revenue for the quarter was at 25,368 crores, and that was a 10.3% year-on-year growth, primarily driven by increase in the customer base. EBITDA was at 13,422 crores for the quarter. The EBITDA margin increased further to close to 53%, and this has been fairly steady. Please do note that at this point, we are not charging for our 5G services. And this is really coming out of the existing set of subscribers using or recharging on the LTE network. Moving on to the financials, consolidated financials for Jio Platforms Limited. We ended the quarter with 27,700 crores of operating revenues. That's 11.3% year-on-year growth. EBITDA close to 14,000 crores. EBITDA margin improved to 50.4%. And that's also been showing an increasing trend. And the profit after tax increased to 5,445 crores, a growth of 11.6%. So healthy double-digit growth in all of the key financial matrices. At this point in time, more of steady state, as several things, 5G monetization, the air fiber, etc., are still still going to get monetized. I will now hand over to Dinesh to take you through a summary of the Reliance Retail results.
Hi, thanks, Anshuman. Good evening, everyone. Over the next few slides, I'll take you through the performance of our retail business. Our gross revenue crossed 83,000 crores, a revenue growth of 23% on a YOY basis. EBITDA grew at a healthy 31% and came at 6,258 crores, while profit after tax grew 32%. Digital and new commerce continues to grow well and contributed 19% of our total revenues during the quarter, increase of 100 basis points on a YOY basis. We continue to invest in infrastructure. Our retail stores has increased by 9% on a YOY basis. We added 250 plus stores during the quarter. Our retail space stands at 72.9 million now, a 21% increase on a YOY basis. We continue to invest in infrastructure, front-end as well as back-end infrastructure, as well as the technology platforms, in order to reach the length and depth of the country, as well as provide consumers with a true omni-channel experience, provide them a good shopping experience as the consumers also are also evolving. If you look at our key customer metrics, footfalls grew a healthy 40% YOY. Our registered customer base grew by 25% and now stands at 293 million. Our total transactions grew 20% and crossed 300 million transactions. It actually came at 320 million during the quarter. Just a few quick highlights across the business. All the major consumption baskets did well. Grocery grew at a 41% year-on-year growth. Fashion lifestyle grew at 28% on a YOY basis, and this is in the context where on the apparel side the market has been weak, and you would see it for the other players as well. But we have done exceedingly well. Consumer electronics grew 19% on a YOY basis. So healthy growth across all our larger consumption baskets. All the businesses are doing extremely well. We had a very good festival season. We saw good engagement from customers and healthy growth during the festival period across the businesses. Our EBITDA margin continues to expand, up 40 basis points on a year-on-year basis at 8.1%. We see the benefits of operating leverage continue to accrue as we have set up the entire infrastructure, and now as we are growing our business, the benefits of operating leverage and margin improvement are flowing through. We spoke about our store expansion. We continue to invest in new formats which are tailored to the requirements of different customer segments. We spoke about Yusta in the last quarter. This quarter we launched Swadesh, which is a format which promotes Indians' traditional art forms. We've opened our first store in Hyderabad, and we have seen a very good response from customers, and a few more stores are in the pipeline. We launched Ajiogram, which is a D2C focused content-driven platform on Ajio. It promotes D2C brands and gives them
चलिए यहाँ पर मैं आपको थोड़े नतीजों के हाइलाइट्स बता दूं, क्योंकि रिलायंस इंडस्ट्रीज के नतीजे इनलाइन हैं, और इनफैक्ट ये अगर आप मुनाफे के फिगर देखोगे या फिर ऑपरेशनल लिहाज से देखोगे तो ये नतीजे अच्छे साउंड कर रहे हैं। रिलायंस इंडस्ट्रीज पे ब्रोकिंग हाउसेस के रिपोर्ट्स और ब्रोकिंग हाउसेस का नजरिया भी पॉजिटिव साइड पे ज्यादा दिखाई देगा, ऐसा लग रहा है। मुनाफे की फिगर 17,394 करोड़ से घटकर 17,265 करोड़ आई है, लेकिन एक्सपेक्टेशन थी कि 17,000 करोड़ के आसपास ही आएगी, तो 17,265 करोड़ का मुनाफा जो कंपनी ने दर्ज कर लिया। तिमाही दर तिमाही आधार पर थोड़ा सा ड्रॉप है। आय 2.32 लाख करोड़ रुपए से घटकर 2.25 लाख करोड़ रुपीस रही है। एक्सपेक्टेशन थी कि 2.36 लाख करोड़ रुपए रहेगी, लेकिन आय पे दबाव है। टॉप लाइन थोड़ा कम आई है, एक्सपेक्टेशन के मुताबिक नहीं आई है, लेकिन बॉटम लाइन देखोगे, कामकाजी मुनाफा देखोगे तो नतीजे अच्छे साउंड दिखाई दे रहे हैं। एबिटा 40,368 करोड़ से घटकर 40,656 करोड़, 1% का डेंट, लेकिन हम एक्सपेक्ट कर रहे थे 40,275 करोड़ के आसपास आएगा। 40,656 करोड़ आ गया, अच्छा आ गया। मार्जिन 17.7% से बढ़कर 18.1% आ गए हैं तिमाही दर तिमाही आधार पर, और 17% के आसपास एक्सपेक्टेशन थी। तो मार्जिन भी कंपनी ने अच्छे पोस्ट किए हैं। तो अगर आय को छोड़ दो बाकी पैरामीटर्स पे मुनाफा, कामकाजी मुनाफा और मार्जिन ये अच्छे साउंड कर रहे हैं। रिटेल कैटेगरी की ग्रोथ, ऑयल एंड गैस सेगमेंट की ग्रोथ और जियो के, रिलायंस जियो के स्टेबल सेट ऑफ नतीजे ये असर डालेंगे। जो मेजर ड्रैग है नतीजों में वो है ऑयल टू केमिकल कारोबार। अगर ऑयल टू केमिकल कारोबार में आय देखोगे तो Q3 में ओटीसी सेगमेंट की आय 1.47 लाख करोड़ से घटकर 1.41 लाख करोड़ रुपीस रही है। क्वार्टर क्वार्टर बेसिस पे ये घटी है और मेजरली इंपैक्ट भी यही पड़ना था बिकॉज प्रोडक्ट क्रैक्स में डिक्लाइन देखने को मिला है, लोअर रियलाइजेशन देखने को मिली है ऑयल टू केमिकल कारोबार में। एक्सपेक्टेशन भी यही थी, ऑयल टू केमिकल कारोबार का प्रदर्शन अच्छा नहीं रहेगा, तो वहां पर एबिटा फ्रंट पे भी दबाव और आय फ्रंट पे भी ऑयल टू केमिकल कारोबार पे दबाव है। जो बेहतर प्रदर्शन कर गया दैट इज रिलायंस रिटेल। आय 8% बढ़ी है रिलायंस रिटेल में, 83,040 करोड़ की आय पोस्ट की है। ऑयल एंड गैस कारोबार में आय 1% बढ़कर 6,719 करोड़ रुपए रही है। अब अगर आप कामकाजी मुनाफे के फ्रंट पे देखोगे तो ये नतीजों में साफ तौर पे दिखाई दे रहा है कि रिलायंस इंडस्ट्रीज में इस बार की जो बीट आई है ऑपरेशनल फ्रंट पे दैट इज बिकॉज ऑफ ऑयल एंड गैस, रिटेल, इन कारोबार का जो प्रदर्शन है ये ज्यादा बेहतर दिखाई दिया है। ऑयल एंड गैस सेगमेंट में कामकाजी मुनाफा 22% तिमाही दर तिमाही आधार पर बढ़ा है, 5,804 करोड़ की फिगर दर्ज करी है। रिटेल सेगमेंट में कामकाजी मुनाफा 8% बढ़ा है, 6,271 करोड़ रुपए की फिगर तिमाही दर तिमाही आधार पर 8% की ग्रोथ। डिजिटल सेगमेंट में भी 1% की ग्रोथ है, 14,261 करोड़ की फिगर आई है एबिटा में। लेकिन ऑयल टू केमिकल कारोबार में 14% का ड्रॉप है एबिटा में, 14,064 करोड़ की फिगर आई है वर्सेस 16,281 करोड़। तो ऑयल एंड केमिकल कारोबार, ऑयल टू केमिकल कारोबार ये अच्छा नहीं करके गया है, बाकी सब कारोबार में अच्छी ग्रोथ है, स्पेशली रिटेल और ऑयल एंड गैस स्पेस ये आउटबीट करके गए हैं इस बार। मार्जिन पिक्चर भी ऑयल एंड गैस सेगमेंट की 86.38% के मार्जिन है वर्सेस 71.98% के मार्जिन, और रिटेल सेगमेंट के मार्जिन फ्लैट हैं 7.55% वर्सेस 7.56%। एक जियो को लेकर कंसर्न ये है कि जियो के जो आरपो के फिगर आए हैं दैट इज 181.7 रुपीज। एक्सपेक्टेशन थी कि 183 रुपए के आरपोस जो है वो जियो पोस्ट करेगा, लेकिन अगर जियो का मुनाफा देखेंगे तो उसमें 3% की बढ़ोतरी है। तो ये नतीजे आप इनलाइन मान के चल सकते हो। और मैं फिर कह दूं जो नतीजे हैं उसमें मुख्य हाईलाइट अगर आप देखोगे तो रिटेल का अच्छा प्रदर्शन है, ऑयल एंड गैस का अच्छा प्रदर्शन है, जियो के स्टेबल सेट ऑफ रिजल्ट्स हैं। आरपो की फिगर जियो की ठीक नहीं, थोड़ा सा बाजार के एस्टिमेट से मिस कर गई, बाकी के नतीजे जियो के ठीक हैं। और ऑयल टू केमिकल कारोबार डिसअपॉइंट करके गया है, लेकिन वो एक्सपेक्टेड था। रिलायंस इंडस्ट्रीज के नतीजे इनलाइन समझे जाएंगे। आइए एक बार फिर सुनते हैं कि मैनेजमेंट इस समय क्या कह रहे हैं।
For grocery specifically, we are also focusing on increasing the share of non-grocery categories. Fashion, lifestyle, and electronics both have really outperformed, and while still relatively small contribution to the overall GMV, but they are growing exceedingly well as the adoption by consumers of these categories is increasing. The Jio Utsav event, which was our flagship event during the quarter, saw a significant growth both in terms of traffic as well as orders. We continue to invest in the platform to improve the product features. Enhance during the quarter, some of the notable enhancements that we did include the product search, return doorstep delivery for fashion, and a lot of other interesting exciting features are in the pipeline. We continue to expand the catalog and offer more options to our consumers. The option count was up 84%, and the seller base was up 3x on a YOY basis. And this growth will continue as we add more and more options to make it a truly horizontal platform. On the consumer brands business, we are pretty excited about this business. It's showing very good growth. The revenue was up 3x on a YOY basis, as well as we are increasing the distribution reach substantially. So this is a business where it has a big advantage in terms of our in-house channels, as well as the B2B Kirana network that we have. But in addition, we are building a broad distribution network to reach a large number of Kiranas across the country, as well as modern trade to build and grow these brands. Some of the notable categories which did very well during the quarter were beverages, general merchandise, and staples. As you are aware, we had launched Campaign Independence brands earlier, in the earlier quarters. Both of them have had very strong traction and very strong response from customers. And every month on month, we are seeing very strong growth in both these brands. We had launched Bugles and potato chips under Allen's, and that again is doing extremely well. And then there are a number of other exciting products in the pipeline, which you will see in the coming months and quarters. Moving on to fashion lifestyle, apparel and footwear business had a good steady quarter driven by footfalls as well as improving conversions. Multiple formats delivered highest ever revenues during the quarter, and this is in the context where the market has been on the weaker side. Broad-based growth across categories, so we're not dependent on one category like some of our other competitors and international peers who are more focused on one or two categories. We are present across multiple categories, and many of them are doing exceedingly well. The festival season, we got a very strong response. Our price value proposition is very strong in the market, and that's helping us grow and drive very strong customer engagement in the market. As we had mentioned earlier, Azort and Yusta were the formats that we had launched in the previous quarters, are doing very well. We are getting very good response, and we are scaling up both of them. And for Swadesh is the format that we have launched during this quarter. On Ajio, another quarter of very strong performance. We added 1.6 million customers during the quarter. We continue to add more and more products. Option count was up 38%. The whole strategy here is focused on offering more and more differentiated products, good quality products to the consumers, and that is being valued, and that's why we are seeing very strong growth on this platform. We continue to launch new brands, partner with designers, as well as launch our in-house brands as well as external brands onto the platform every quarter. Some of the notable ones we did during this quarter was IndiePix. We launched with Dhruv Kapoor, the Champion brand. So multiple brand additions during the quarter. We spoke about Ajiogram earlier. Pretty excited about this initiative. There are a lot of very interesting D2C brands which are coming to market, and we are creating a forum and a platform to grow these brands and help with these brands scale up quickly, take them to the consumers. And customer remains at the center. We continue to enhance new features to improve the customer experience. Several new features added during the quarter, and more are in the pipeline. On our partner brands, which is our luxury, premium and luxury brands portfolio, we continue to lead the market. We have the widest portfolio of brands, and we are the partner of choice for any international brand looking to come into India. We spoke about the Sephora and SMPC partnership agreements earlier. Ajio Lux, which is the luxury part of our online Ajio platform, and offers a host of luxury brands, continues to do very well and grow from strength to strength. We have a portfolio now of over 660 brands, and every quarter we are bringing new brands onto the platform. Jewels had again a very good quarter, driven by the festive and wedding buying season. Dhanteras, which is one of the key occasions and big driver of sales for jewelry. We had the highest ever sales during that day. While we are very strong in metro and tier 1 cities, we are also seeing very strong growth in tier 2 and beyond cities. In fact, they are growing faster than the overall rate of growth of the business. So our proposition is getting very widely accepted. We are focusing on launching new exclusive designs, collections that help us differentiate. Some of the notable ones, Swan Banga was a regional collection, where Aham was a wedding collection that we launched during the quarter. So these really help us create new themes and bring differentiated products to the market. Lingerie, which is one of the newest segments, we are the largest player in this segment now. Across the host of brands, the D2C brands, the Clovia, Zivame, Amante that we have, we sell lingerie in our apparel stores. We have joint venture with Marks and Spencer and Hunky Muller franchise. So across all those, we are pretty large player. We are looking at expanding the reach both within the Reliance retail formats as well as take these or take our D2C brands to the physical distribution network as well as the exclusive brand outlets, as well as continue to add new categories, new products within each category to really expand the range for these brands. We also executed several co-brand promotional tie-ups during the quarter, and we saw pretty good cross-pollination on these partnerships. Urban Ladder, which is our furniture offering, the focus continues to be on ramping up the store network and expand the presence across cities. We are also leveraging our smart bazaar formats where we are launching SISs for Urban Ladder in these stores, typically focused on grab and go items, which work very well in these. So these get more doors as well as customer footfalls, increases brand awareness, and direct traffic to our online offering as well as the experience centers from these stores. Tira, which you are aware, we had launched a couple of quarters back, continues to grow. We have got some very strong traction. We have set up a few stores across top tier cities, and we'll continue to expand the network. And we're getting very good response from customers. We signed up 3 celebrities to promote the brand. We have seen very strong brand recall and engagement from consumers on both our stores as well as online platforms. We are in differentiation is to offer a differentiated. It's an experience discovery driven category. So offer a differentiated retail experience through larger formats and wider assortment. All our operating metrics, including sales productivity, average bill values, repeats, the engagement all across brands, all of that seeing our good strong momentum. Early days, but we are very excited and seeing very good results in the initial days. We are also including many new launches, many new brands we are bringing to India. Some of the notable ones that we signed up for online as well as offline during the quarter are Laura Mercier, Allies of Skin, and Blessed Moon. Next. Moving on to our consumer electronics business, again had a pretty sustained 19% YOY growth. We see healthy growth in average bill values as well as the conversions are improving. The growth has been quite broad-based across phones, large appliances, as well as TVs. In fact, we saw a strong surge in demand for large screen TVs during the World Cup. So the large screens TVs did 55, 65 inches plus TVs did very well. We had number of flagship mobile phone model launches during the quarter, and that contributed pretty significantly to the performance of phones, as well as other categories. We continue to increase the assortment, including ACs, refrigerators, and working with brands to launch exclusive products for our stores. Rescue, which is our biggest differentiator in the electronic segment, we continue to increase the geographic footprint as well as increase the proposition, continue to add new services, new plans into that business, also targeting the out of warranty opportunity there. PB on our product brands group, we are launching new products across categories to see where the wide gaps are in the market and bring products which are high on quality and very disruptive pricing. We continue to expand new doors. Our merchant base is up 2.6x on a YOY basis. Now we have pretty significant depth in terms of the reach where our products are present. On our JioMart digital business, the focus is on expanding the merchant base, which is up 34%, as well as improve the participation of merchants. Ultimately, how many categories are the merchants buying from you, and how frequently are they buying? Those are the two most important metrics to ensure that we are relevant and they find a proposition attractive. And both those metrics are month on month. We are seeing very strong growth. That's it on the retail side. Now I'll hand over for the update on oil and gas.
Thanks, Dinesh. Good evening, everyone. To do a recap of the quarter gone by, so this was the highest ever quarterly EBITDA for the oil and gas segment. We had a 50% jump YOY at 5,800 crores, largely driven by higher volumes with 19 wells all in production from the from 3 fields. We have seen this production increase. This we expect will sustain. Currently, we are producing about 30 million standard cubic meters and oil and condensate of about 21,000 barrels per day. In terms of prices, yes, we've seen prices come off a little bit. In fact, as you may be all aware, that ceiling prices had come down from $12.12 to $9.96. And with global factors impacting demand factors and high inventory levels impacting prices, we've seen a slight pullback in prices, gas prices, which had, to a certain extent, offsetted the gains made in production. Next slide, please. So at KG-D6, the main focus now is how to sustain the production from these fields. All 19 wells are producing. The fields are producing as per expectations. And CBM, we've launched the 40-well multilateral campaign, the first in India. This is to maximize and improve the productivity from these fields. We expect the results to come in over the next 2 quarters. Further in KG-UDW1, we are currently doing an exploration well in the block. Next slide, please. So as you can see in this graph, we've had sustained increase in production as we commission the fields from FY21 onwards, and comparatively between the 9 months of this fiscal versus FY23, you can already see a 6 million standard cubic meter increase. And this will continue to increase in the quarters to come with a plateau of about 30 million standard cubic meters. So currently we are contributing about 30% of India's domestic gas production. Next slide, please. So we completed the auction for 4 million standard cubic meters of gas from KG-D6. This was the 6th auction, and this way we have now managed to sell all the gas that we are producing. So the offtake is all tied up. For this specific round, there was significant participation. We had 38 successful bidders, largely from fertilizer and refineries, and to some extent from CGT and aggregators. So the main contributors were CGT and fertilizer. And as you're all aware, the price realization will be subject to a cap of $9.96 per MMBTU. Next slide, please. So in terms of the gas market outlook, clearly the winter has been a lot milder in Europe, which has essentially resulted in higher inventory levels and lower demand. As you can see, the storages are at about 82.6% at the current juncture versus 5-year averages of 70.4%. So clearly that has had an impact on the prices. The sense is the short-term prices will be guided by the severity of the winter. There has been some pickup in demand from China. There's also been some cold spells in China that has spurred the demand, apart from the economy showing some signs for higher demand. In Southeast Asia, again, the demand is price sensitive. So at lower prices, we are seeing higher demand. So overall, there is a little bit of pressure on gas prices. And again, this is going to be dependent on the winter. Thank you, and over to you, Shrikant.
Hey, thanks, Sanjay. So moving to the last section, which is O2C. Year on year, revenues have been lower on the back of reduction in prices of Brent. Otherwise, when you look at EBITDA, as I mentioned, up 1% in a fairly challenging environment. we focused a lot on product placement in the domestic market, given that the demand was good. Also, a lot more of fuel retailing volumes we saw. Overall, trends in margins have been mixed. Mid distillates were lower when you look at it on a year-on-year basis, but of course that was also offset by lower SAED. However, gasoline cracks were better when you compare it on a year-on-year basis. Downstream polymer margins lower anywhere between 4 to 17% on the back of muted demand and also excess supply. So you're seeing that. On the polyester side, margins have been on an integrated basis has been stable, as some of the PX improvement has been offset by weaker polyester delta. There also the environment was, there was oil sourcing. Market has been fairly tight in that sense of the word. So some of the arbitrages have been lower. Q-on-Q, performance was lower on the back of maintenance and inspection shutdown. I talked about it earlier on, which impacted yields and profitability. Given the fact that reduced fuel production and lower light feed cracking. But it was fairly extensive in terms of the maintenance part of it. It was across units, across CDU, across FCCU, coker and ROGC. So it was a large M&I, and had it not been for this M&I on a year-on-year basis, clearly the numbers would have been higher and absolutely comparable to last quarter if all these units were available during the whole quarter. Just a quick snapshot of the overall environment. Clear highlight, you can see global oil demand at 102 million barrels per day. It's about 1.7 million barrels. So if you see geography-wise, China is really 1.5 out of 1.7. Demand has been good in even the Americas and Asia. When you look at it from a product cut, you can see that jet demand has gone up by 1.1 million barrels per day and gasoline 1.1. So you can see that kind of demand and why both the geography and the product cut. On the polymer side, India demand up 10%, polyester more muted at about 1%, but very broad-based demand if you see across agriculture, across infrastructure and packaging. Operating rates clearly down, as you can see, 78.5%, down 120 basis points. A lot of refinery maintenance we saw globally. On cracker, operating rates also been lower to 80.8%, almost 4% lower. On the back of weak demand and on the back of excess supply in the market. This is the Indian oil demand, of which we have picked up the three important ones: gasoline, HSD, and ATF. So overall demand up 2.1% year on year, and if you see on a quarter on quarter, it is up 5.5%. Gasoline, clearly travel has played a part. Auto sales, you can see booming, growth there, reflecting in demand for gasoline. HSD more muted, but clearly there is a very positive momentum in mining and in the industrial sectors. ATF, very strong growth, 11% growth. You can see the recently released data on air passenger traffic at 39.2 million. In this quarter, it's up 9%. So explaining why demand for ATF has been strong. And when you come to the polymer market side, clearly 10% when you look at polymer in aggregate, but the components, PE 13%, PP more muted at 3%, and PVC 19%. So PE specifically led by infrastructure pipes. On PVC, the continuing focus by the government on schemes for agricultural and infrastructure. So that really explains why that demand continues to be pretty strong. In the polyester side, clearly it is PET up 9%. Beverage consumption was pretty strong during World Cup and the festive season. On PSF and PFI, which are recording a little.
चलिए, तो ओवरऑल नतीजे इनलाइन है रिलायंस इंडस्ट्रीज के, और हम बार बार यही बोल रहे हैं कि नतीजे इनलाइन है। ब्रोकिंग हाउसेस की कमेंट्री थोड़ी पॉजिटिव साइड पे ज्यादा देखने को मिलेगी। मुख्यतः जो नतीजों का हाईलाइट पॉइंट्स थे उसमें मुनाफे की फिगर 17,265 करोड़ रुपए आई। हम एक्सपेक्ट 17,000 करोड़ रुपए के आसपास ही कर रहे थे। और आय जो है वो आई है 2.25 लाख करोड़, एक्सपेक्टेशन थी 2.36 लाख करोड़ की, तो आय मिस हो गई है थोड़ी। लेकिन कामकाजी मुनाफे के फ्रंट पे अच्छा प्रदर्शन है, 40,656 करोड़ का एबिटा। हम एक्सपेक्ट कर रहे थे 40,276 करोड़, और मार्जिन 18.1% के आए हैं, एक्सपेक्टेशन थी कि 17% के आसपास आएंगे। प्रदर्शन रिटेल का अच्छा रहा है, ऑयल एंड गैस सेगमेंट का अच्छा रहा है, और जियो का जो प्रदर्शन है वो इनलाइन समझा जाएगा। जियो के आरपूस जो हैं वो बाजार के एक्सपेक्टेशन के मुताबिक नहीं आए हैं, बाकी का जियो का प्रदर्शन ठीक है। डेट लेवल कंपनी का है 37,463 करोड़, और कैश है 23,118 करोड़ बुक्स पे। जो मेजर ड्रैग है इस बार के रिजल्ट्स में, दैट इज ऑयल टू केमिकल कारोबार। और ऑयल टू केमिकल कारोबार का प्रदर्शन, चाहे वो रेवेन्यू फ्रंट पे हो या फिर कामकाजी मुनाफे के फ्रंट पे, वो दबाव में रहा है तिमाही दर तिमाही। लेकिन एक्सपेक्टेशन यही थी कि ऑयल टू केमिकल कारोबार बिकॉज ऑफ प्रोडक्ट क्रैक्स में जिस तरीके का डिक्लाइन देखने को मिला है और लोअर रियलाइजेशन के चलते ऑयल टू केमिकल कारोबार अच्छा नहीं करेगा। अभी आप मैनेजमेंट को सुन रहे थे और नतीजे इनलाइन है। अब देखते हैं रिलायंस इंडस्ट्रीज की ओपनिंग कल के सत्र में मार्केट की कैसे होती है।
Economics for us on ethane cracking was pretty helpful. Polyester chain, as I said, at $488 a ton, flat on a year-on-year basis, though sequentially is a little weaker. While we saw a significant improvement in PX delta, we also saw that it was offset by PTA deltas being weak. MEG deltas were better, but it was on a lower base. Q-on-Q was more to do with PX margins being weaker, and these margins were reduced because of higher supply on lower gasoline cracks. Overall, polyester prices declined given subdued China demand. Moving to the transportation fuel, on gas oil side, demand actually was a little bit weaker by 0.18 million barrels per day. So total demand for gas oil is about 29 million barrels per day. So it was lower, but you can see the demand for India and China was much higher, and you decline in Europe and Africa. The cracks did moderate both year-on-year basis and QOQ on the back of Chinese exports because they released their third batch of export quota, and also a supply from refineries as they came out of maintenance. Also, it is fair to say that inventory levels are continuing to remain high. So while deltas are definitely lower, but you can see at absolute levels they still remain in some sense healthy, and overall outlook also for gas oil, remains good. On jet kero, again, you are seeing the both year-on-year and sequential fall, but absolute levels of deltas are at 24 are strong. Here there was increase in demand, 1.1 million barrels per day, and you see that it is primarily on account of Asia Pacific demand, which accounts for most of it. Also, by the cracks declined, as I said, both year-on-year and Q-on-Q, and this really followed trends of gas oil cracks and a weak seasonal demand, Chinese exports, all of them played a part in as far as why it was lower. And Asian regrade strengthened on the back of because of higher offtake in both US and Europe. This is the slide for gasoline. Here, year-on-year, you did see increase from to $7.6 per barrel. But when you look at the overall demand here, also has been good, up 1.1 million barrels per day. You can see it entirely in Asia Pacific, so strong growth there. And overall cracks improved on the back of this demand in Asia. Also, important for me to highlight that in 3Q of FY23 was fairly impacted because of supply due to refinery runs. At that time, you may recall that the distillate cracks were pretty strong, so refinery runs were strong. So a lot of gasoline got produced. So that's also explains why it is higher on a year-on-year basis. Q on Q on the back of it is a post-summer driving season, and also increased supplies from refineries as they came out of maintenance. For us, this is the operating trend. Throughputs at 18.7 million tons, lower than what it was in 2Q of FY24. And that, there is the aspect of M&I shutdown, as we have detailed which are the units which went under shutdown. The CDU, the coker, and FCCU and ROGC. From our part, we continue to focus on maximizing the arbitrage barrels as the official OSPs remained high. So that was important for us to keep that focus on to minimize feedstock cost. We focused a lot on getting on alkylate and high-ron gasoline exports, given that the premiums and netbacks were pretty good. Aromatic margins remained subdued, and we optimized our production to capture the overall chain margins. And for the first time, there was a dispatch of circular polymer, which is Circurepol, which is really about minimizing plastic waste through chemical recycle. That's part of our sustainability initiative. On overall perspectives, if clearly this market is going to remain volatile on the back of OPEC actions as well as the war. When you look at, however, look at demand environment, last year it was 2.3 million barrels per day. Even 24 calendar year, you should people are forecasting about 1.2 million barrels per day, and China will continue to be a large component of the increase. Also, overall, we do think that jet fuel cracks, demand remains good. Gas oil cracks also expected to remain firm, given the demand for jet fuel, as well as the fact that there is limited availability of heavy crude. So the context, therefore, is that in this environment, it's fair to say that one can be constructive on refining margins in this environment of continuing demand for these products. However, on downstream side, on the chemical side, clearly market is expected to remain well supplied in the near term. And overall, of course, the offset is the fact that domestic demand remains resilient in line with the kind of economic activity that we are seeing in India. So just to bring it together, overall, while the environment was what it was, I think our focus has been on operational discipline. And despite all the dynamics in all the markets, done well to be where we are. And when I refer to operational discipline, it's across businesses, and you saw Dinesh talking through each of the parameters there in retail. Overall, we do see strong domestic demand, and this is in consumer as well as energy market. So that's pretty positive for us. Overall, OTC earnings, is going to remain a bit volatile, and because of volatility, because of market disruptions. But I think overall, refining margins, given the context that I described, is favorable in that sense for some of the cracks there. However, downstream margins do remain a bit pressured on the back of feedstock prices being high, as well as demand from China still being tepid. Overall, from when you look at how we have seen, when you look at revenue growth, you look at margin expansion, we are seeing it across our businesses. Geo, the 5G infrastructure rollout, the customer add, the growth in data traffic, and the fact that many of these things are yet to be monetized. So there are positive drivers for growth. Retail is in a good place with the kind of, when you look at each of the verticals and the dynamics and our own strategy against each of those formats holds well for us. And we are on track to commence the new energy facilities in phases starting end of this year. So overall, I think cash flows remain strong, balance sheet remains strong, and moderating capex. You may have seen that capex in this quarter at about 30,000 crores is significantly lower than the previous quarter, as well as what it was year on year. And actually, a cash capex, cash profits are higher than what is the capex that we are spending. With this, thank you so much for being on the call.
And good night.